Joining us for a further look at what's playing itself out in the market scene is Richard Quarter from Argon Asset Management. Richard, good afternoon to you. Thank you so much for your time today.
Good afternoon.
Wonderful. Richard, I think the big news of the day, certainly China, that GDP print for the fourth quarter, but also for 2023 as a whole. It's coming at 5.2%. In some corners of the world, this is a great, but not for China.
Yes, I mean, absolutely right. I mean, the 5%, it still doesn't quite compare to high single digits or even low double digits that China has managed in the past. I think the world is sort of looking to China as a source of growth, and it's a matter of expectations, and they're not quite meeting up to the market's expectations at the moment, which is why we saw the Chinese and the Hang Seng sell off this morning.
What is also interesting, I guess, about the Chinese economy is the issue of it being in transition from being an investment-based economy to a consumption-driven economy, Richard. And I'm wondering if what we're seeing now is not maybe the transition between the investment economy to this consumption-based economy that's causing this lag in growth as well.
Yeah, look, I mean, an economy, whether it's a global economy or like in the Chinese economy, it's a very intricate thing. So we try and talk about it in broad terms, but it is made up, the market is made up of like millions and in some cases billions of individuals interacting. So it's a tough one to answer, but it's that transition from an investment-based market to a consumption-driven one was never going to be straightforward or easy, especially when you look at the property sector in China, how much of a Chinese person or a Chinese landowner's wealth is tied up in the property sector. And we're seeing what's unfolding in that sector at the moment. It's not... a homeowner is not going to come through that unscathed, and that will have an impact on its, at the very least, on his sentiment, on his outlook towards how he wants to spend his money. So it's a tricky one to call. It's not an easy, simple thing to bring about, but we'll have to wait and see what happens on that one.
Before we move away from China, Richard, I'm also keen to get your thoughts on export. We've seen export numbers go down there. Does that tell us that the global economy, where China would normally export to, is also in a bit of a downturn? And I'm wondering if this is something we can see more of in 2024 with such an uncertain environment that markets are trying to maybe make sense of right now.
Yeah, I mean, I think the Chinese economy in total, there's very little in the way of bright spots. I mean, yes, we speak about like a 5% growth rate, but and coming out on target. But you look at like, sorry to repeat my point from the previous question, but like the Chinese homeowner being under pressure and watching the value of his house decline year on year, that does sort of translate into other parts of the market, other parts of the economy. So the Chinese government is trying to do its best and to stimulate different parts of the economy and to add some stimulus, but so far it's not having the desired effect.
Moving on, I'd like to look at the rand trading just over the 19 rand mark to the dollar. Of course, this does mean more dollar strength than rand weakness, Richard, but that doesn't bode well for our story here at home. I'm just keen to get your thoughts on this development.
Yeah, I think you're absolutely right. I mean, I do at the moment. Look, I mean, I don't want to try and make predictions in the near term about where the rand is going to go, but I think you are right in that at the moment it seems to be more a case of investors or market participants like flooding towards the dollar as opposed to away from other emerging market currencies. But I think what we as a country need to do is just focus on what we can control, which is just our monetary policy, which is quite sound, and just to focus on our fiscal situation and make sure that we get that back in order.
The president of the Dutch central bank, Klaas Knot, has been quoted saying that markets are getting ahead of themselves in terms of expectations about interest rate cuts. And we saw at the end of last year, upbeat screens there in the markets because we were anticipating it. But of course, the mood is very different in 2024 so far, Richard. What are our thoughts here? Did markets kind of jump the gun, or were there enough? Was enough signaling at the time in late 2023 for for a buoyant a performance?
Yeah, I think at the moment, everyone in the market seems to be hanging on the word of central bankers around the world, especially I think in the Fed's always trying to like message and signal going forward. I mean, the Reserve Bank has indicated that, at 5.5%, where I think our CPI print is still above the 4.5%, which is ideal. So unless we see significant rate cuts globally, it doesn't seem likely that we're going to have rate cuts here at the moment. But you're right. I mean, the market does seem to be trying to guess which way the interest rates are going to go and try and get ahead of that. Um, it's not something that we particularly do here at Argon, in terms of we just try and focus on identifying good businesses at what we think are attractive prices.
Is that possibly the best investment strategy right now, Richard, at this point, is to control what you can control, as much research done possibly on companies, and really betting on those companies that are defensive in time of turmoil? Normally at the beginning of the year, we try to look ahead, but there isn't enough information to kind of gauge where markets may go this year.
Yeah, I mean, even like to broaden the question back to China and Hong Kong. I mean, the valuations of those markets are looking incredibly attractive. Something like Tencent, which is very relevant to the South African market, is trading on a 4 PE multiple that we haven't seen in almost 2 decades. So you're right. I mean, it is the case where there's lots of uncertainty, and the ability to forecast is a lot more difficult. But when that happens, the market retreats. You are presented with opportunities, and if you can stick to your process and stick to your philosophy, and you can have the stomach to see it through, then like your client should benefit from that.
Also, I just want to touch on oil. Also hard to gauge what's happening here. But I'm just wondering, between China's economic issues and also what we're seeing in the Middle East, can we expect a volatile year of oil? And I think then when we look at what's happening with the rand here in South Africa, our inflation picture literally gives me heart palpitations, Richard. We thought we had turned a corner, but it looks like, with all things staying the same at this rate, it could be a more complicated picture than that.
Yeah. So I think it's the other point to consider with oil, not necessarily in the near term, but in the medium to longer term, is just the lack of investment in new oil reserves around the world. I mean, there's been a move to try and get the world off hydrocarbons, which I think has been a disincentive for like the oil and gas companies to actually explore and discover new oil fields. I mean, I think there's one of Guyana, which is one of the more significant ones. But other than that, there's not too much new oil discoveries. And at some point in time, you might have this mismatch between supply and demand, where all of a sudden we find they're a bit short of oil. And in that case, that would be very positive for price of a barrel of oil.
Well, that's it, Richard. I'm keen to get your stock pick for this afternoon. Which counter are you betting on?
So it's one that we've mentioned before in the show. So we're going to go with multi-choice again. I don't know if any of your viewers were noticed yesterday that the new Showmax products were disclosed to the market. So last year was a very bad year for the Showmax share price. I mean, the beginning of the year it was hit with a bit of a perfect storm, and we had very bad load shedding in South Africa, which have impacted the multi-choice South African business, which we know like with DStv. They had to take a significant impairment on their betting JV. You had the Naira, which went through its liberalization process and went almost into free fall. And they had to suspend their dividend in order to invest in this new Showmax proposition that they're finally bringing to the market. So overall, I think the share price in multi went from like 140 Rand to below 70 Rand last year. But the market focuses on the near term, and all of those factors I mentioned negatively impacted the earnings in the short term, but the longer term value in the business is still there. And so maybe not necessarily in the very short term, but over the medium term, we're very happy to hold multi-choice. We think Showmax 2.0 is a business and it is worth something, and we don't think the market is quite factored into the share price at the moment.
Brilliant. Well, it's been a pleasure hearing from you, Richard. Thank you so much for your time today. That was Richard Court from Argon Asset Management.